Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York. It is Thursday, March 16th, 2017, and this is the Daily Report for gold and silver. Exactly one day after the Fed announcement of the current interest rate hike, as well as some indication of their current posture or tone moving forward, we are seeing market participants reacting to this news after having a day of digesting it. Precious metals continue to run to the upside, although nothing like what we saw yesterday. We still had a significant upside move in gold and silver. US dollar continues to fall. First, let's take a look at gold, 1226.40. Now, this, of course, is most current April's futures contract. We would be looking to put a trade on, but we would put it on in the June contract of gold. We'll talk about that as we pull up our first chart. Net change is a little bit ambiguous. It's putting it up about $25.70, a gain of 2.14. That's really the net change over the last couple of days. You'll see that when we pull up the cash market or spot market gold pricing. But nonetheless, low today has been 12.18 with a high of 12.34, and we're currently trading at around 12.26. And the reason that I talked about the net change is that when you look at the chart, specifically look at the chart gallery from yesterday, and you will see that the market closed about $7 roughly from the area that it's currently trading at. And this is really the true reflection of the net change we're seeing today, which is up about $7 or $8. So we haven't really seen any kind of major dip in the market, but we are currently trading 1226.50 in that area, up about 17.50. And the net highs and lows are about the same, 18,233. The key is that over the last 2 days, we have seen gold prices appreciate roughly 2%. Silver also trading higher yesterday and trading higher today. Net change today combined with yesterday is 17.33, 41 cents. And the reason that we're seeing it this way, we will have to explain as we pull up our first charts. Now, the dollar, which began to really plummet or fall once the news came out, we had an interest rate hike, 25 basis points, 0.25%. That was to be expected, but it seems as though their tone has not changed. They're still, in terms of the dot plot, still looking for another 2 interest rate hikes during the year, but they talked about continuing to be accommodative in terms of their monetary policy. And in essence, layman's terms, that means that there is still cheap money to be had. And that's what is fueling the decline right now on the dollar, is that we're not going to see interest rates spike up as quickly as if they would have had a more aggressive tone. We're now at 125, off about 0.5% today, about 1% yesterday. Net change since the announcement, a little under 1.5% drop in terms of dollar value. Now, that has kind of spilled over into the equities markets. We had a one-day wonder, a really strong flash, but today we're trading kind of neutral to flat at 20,934, putting it down about 15 points. As you can see, not a full move in the market. I'm going to call this fractionally unchanged on the day. Same thing with the Standard & Poor's. Standard & Poor's fractionally lower on the day. As you can see, the net change on this is about 0.15%. So very, very slight change, or a 4-point drop in the market. So traders, no doubt an impressive move today. As I said, up about $7, but I want to draw your attention to the way these charts are created, as well as the net change, because they've obviously just moved to a different contract, a rollover, so to speak, because what we're noticing is this. This is yesterday's page, and of course we have our chart gallery. I'm going to blow this up, and I draw your attention to this current daily chart. This, of course, does not include today's activity, but obviously includes yesterday's activity. And what we can see when we look at this particular chart is this candle size here, and that's the dynamic move that we witnessed yesterday. Now, with that in mind, let's take a look at this same chart as it appears today. And so traders, as you can see, this is our daily chart. Yesterday's activity on this chart, or it's the same chart but updated, now puts the close, you've got our open and close, that's our green candle, down back at around 1203, and that's why we're getting a net change of 25 $5.50, a 2.12% rise, when in all actuality, the market closed, as we just saw, a little bit higher than this at around 19, and that's where we're getting our net change. Now, here's the key. Regardless of the net change and how this particular chart looked, the fact of the matter is that since yesterday's activity, we've not really seen any kind of a dip. Any kind of a dip would have been a signal for us to enter into the market. I do believe that we have formed an absolute bottom in gold pricing with major support holding at $1,200. That's a no-brainer. You don't have to be a rocket scientist to figure that out. We can see that right here. We had these series of doji candles leading up to the FOMC meeting. We had this one low tested at 94, which happened to be a 50% retracement, and so it aligned with the numbers that we were looking at. We also got a significant bounce off of this particular move, and really the best way to look at this, because the candle doesn't give you the information as precise as I'd like to see it, would be to look at it in a bar format, which gives us more of an indication of what we're looking at. Now, we absolutely still say that we have made it above the next level, which is 1211, and then there's a minor level at about 1220. So entering the market at any point around 1220 would be a decent play, I believe, and that's currently what we are looking at in terms of a strategy. You see these tops that are sitting up here. We are clearly above that in terms of our close. So if we don't get a pullback either later tonight or tomorrow, we will just re-enter at the market, regardless of whether it's a 26 or a 30 or a 21, because traders, the key to what I am currently looking at is the fact that I believe there is a high probability that we have seen the potential bottom in market pricing in gold at around 1200. I believe that that particular price point has held. When we look at the overall moves that we have seen in gold this year, starting from the end of last year, we began our rally at 1121. We had a major market move that included one correction taking us to about 1265, and now we have seen that market correct from this initial rally here to about a 50% retracement. That's the 1194, and I believe that that's solidly in place, and we're now, of course, about $26 off of that. In terms of our various levels of resistance right now, we do have a level of resistance at 1231, and then we have a real major level of resistance at this former high at 1265. However, if we're looking at, in terms of an Elliott wave count, something like a wave 1, our wave 2, and then this being a wave 3, by virtue of the model, we will have to exceed this particular top, and this rally that is upcoming would need to match, in terms of the range and the amount that the market moved, a similar range to what we've seen here, which is well over 100. What about 140? Now, the reason that I'm not dividing this into a wave 1 and then a wave 2 and this being our wave 3 is, if you notice, I've got a fib extension sitting here. This fib extension is based on this low at 20, this market move or high here, which comes in at 1220, so a $100 move, and then the extension starts from the bottom of this correction, and a one-to-one move would have taken you to 1275. So that would mean that if this was a wave 3, it was a truncated wave 3, and it gates the three basic principles of Elliott wave, which is why this is probably still a wave 1, this being our wave 2, and we are now in wave 3. So traders, you can really see that wave count when we look at a candlestick chart. This, of course, based upon our weekly candles. And here's the exciting news, because all I've done is basically extrapolated, if this is a wave 1 move right here, and if this is a wave 2, then if wave 1 and wave 3 are equal, we can determine the upside move, of course, by simply putting in a scalable trend line, which is what I have, and then placing that, a duplicate of that trend line, at the bottom or the beginning of the end of this correction, I should say, as the market has sold off over the last couple of weeks just prior to this. When we do that, here's the interesting result. If wave 1 and wave 2 are simply equal, that would mean that this next rally, we could see gold prices not only take out the former high at about 1260, but move as high as 1340. That's a one-to-one relationship. And here's where it gets interesting. If you recall from the last daily chart, we took a look at the fact that when we did an extension, and the extension was simply from the point in which the first part of the rally went up $100, then the correction, and then we started that extension again. The reason we said that this last component is probably not a wave 3 is it did not equal the one-to-one relationship. It was shy of that. The 1.618% extension of that component of the rally, lo and behold, takes you right to the same price point. This could be the beginning of a major rally, and I am excited about that. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.